In this video, we'll show the reaction of the U.S. stock markets after stronger than expected results of the ADP jobs report. U.S. stock markets experienced a decline following the release of an unexpectedly robust private payrolls report for June, which raised concerns about potential interest rate increases. As of 11:20 Eastern Time, 15:20 Greenwich Mean Time, the Dow Jones Industrial Average had dropped by 503 points or 1.5%, while the S&P 500 and Nasdaq Composite fell by 1.4% and 1.6%, respectively. The decline in the stock market was further fueled by the minutes of the Federal Reserve's June meeting, where policymakers reached a consensus that additional rate hikes are probable as part of the central bank's efforts to curb inflation. Market futures are currently indicating a predicted 0.25% rate hike in July, followed by another increase in November. These potential rate hikes come after the Fed had previously paused on raising rates in June to evaluate the impact of their 10 consecutive hikes up to that point. Key economic data expected to be released this week include jobless claims, job openings, and private payrolls data, leading up to the job report for June scheduled for Friday. ADP's private payroll reading for June revealed the creation of 497,000 jobs, surpassing expectations of 228,000. However, jobless claims for the previous week came in slightly higher than anticipated, and job openings at the end of May were slightly lower than expected at 9.8 million. If the upcoming job report for June indicates strong employment growth, it may encourage the Federal Reserve to continue its trajectory of raising interest rates. In recent months, the possibility of the Federal Reserve concluding its tightening phase had contributed to a rise in tech stocks, with the Nasdaq index climbing by 32% in the first half of 2023. However, Meta Platforms, Inc. Nasdaq, Meta, the parent company of Facebook and Instagram, experienced a minor decline of 0.2% after launching its competitor to Twitter. Nonetheless, Meta's stock reached a new 52-week high during early trading. The visit of Treasury Secretary Janet Yellen to Beijing for meetings with Chinese officials also impacted the market, particularly the shares of chipmakers. Tensions between the U.S. and China over technology and other issues were a cause for concern, resulting in a 3% drop in Intel Corporation, Nasdaq, INTC, shares and a 2.4% decrease in Qualcomm Incorporated, Nasdaq, QCOM, shares. Furthermore, JetBlue Airways Corporation, Nasdaq, JBLU, experienced a 6.4% decline after announcing the termination of its alliance with American Airlines, Nasdaq, AAL, and a shift in focus toward its acquisition of Spirit Airlines, NYSE, SAVE. Overall, these market developments highlight the sensitivity of investors to factors such as interest rate expectations, economic data releases, geopolitical tensions, and corporate announcements, all of which influence stock market performance.